Hello everybody, welcome back. Make a quick video. There's not a great deal to say. We're looking at the US 500 to begin with, which is actually still positioned to be bullish, really. I'm not saying it's going to break out 100%, but it's not breaking down at the moment. And if we did move down, the first touch would be just the same as we've been saying these last few days. Move down towards the 200 simple exponential moving average on the 4 hourly, roughly around 5,500 now, because it's creeping up with every 4 hourly closure that we get. Move it to the daily, and the only reason I'm boring you about this chart is because if this decides to go down, if it decides to break down or just go into a downtrend, then crypto is not going to be happy. And those lower targets that we've been, I suppose, not like calling for, but more than aware of. We're talking, below 40,000 basically for Bitcoin, and then wrecked city for altcoins. And that's when all those prices come to fruition because the larger markets will influence the smaller markets like Bitcoin, which would influence the even smaller markets like altcoins. And it's almost like a factor of two. If S&P goes down 10%, Bitcoin maybe 20%, altcoins maybe 40%. You see what you know that you know the drill. So, but at the moment, the 7 simple moving average on the daily is where we're getting support, and it looks like we're going to try and attempt to take out the previous all-time high. Whether we get rejected there is a different story. I really not entirely sure, to be honest. The V-shaped recovery has been very nice, and at the moment, the momentum, at least on the daily, is still towards the up, despite being relatively hot and overheated. But that doesn't mean anything. Right, so here we are, Bitcoin. So I've drawn a simple symmetrical triangle in here on the weekly. So this is our consolidation that's still going. The triangle makes more sense than the channel, to be fair. And it also allows for a 50-50 formation break in either direction. We're currently below the 21 exponential moving average, which is, I suppose, gives more weight to the idea that we stay below there, which, again, now we've taken out that 61,500 from yesterday, which is not just that 21 exponential on the weekly, but it was also the golden cross that we were looking to see if that was to be held. And it was absolutely annihilated, completely annihilated. So this looks like it's going to form a death cross now. Because it's so dramatic, probably by this time tomorrow, unless we can literally just shoot back above that area, we're going to get a death cross, and then we'll be looking for 61,500 to be resistance. So we might see a move up in the next 24 to 48 hours to that level, and then a rejection from there. So it doesn't look particularly happy, I have to say. It doesn't look particularly happy at all. And again, on the daily, we're below all moving averages as well, making it look more likely that we're going to remain below these areas. Again, the center of the Bollinger Band being roughly around the 61,500, 21 exponential, 60,900. So much resistance above us right now on the daily, 4 hourly, weekly, you name it. So, to be fair, if we did get that, I wouldn't even call it a dead cat bounce, but just a move back up after yesterday's horrendous move, then rejection or resistance, major resistance around 61,500. So that's fine. Also, at the bottom of the channel, if we're talking candle bodies on the weekly, brings us down to 56,800. That's what the support would be on the formation. And if this gets lost, then we start to make the lower lows that we were hoping for that could potentially bring us the bullish divergence that we'll get on the money flow index. So it's not all is not lost. The consolidation is still in play. We should allow for the consolidation to play out. This is why I was skeptical of whatever took place, after Friday's FOMC meeting, where the man said words that influenced the markets, and the markets responded. People getting very bullish, people very excited. Oh my God, I can't believe it! Crypto's going up. You saw people making calls for all kinds of altcoins. Buy this now. Don't miss out on this now. Buy this now. Don't miss out on this now. Oh my God. Do you realize why this move has happened? Anyway. So yeah, if we did lose this area and we break down below the formation, we've got supports on the weekly, 54, 52, 600, and as a pose on a horizontal basis, 43, 800, and then obviously the main holy grail. If we were to get down to these levels, this would be an unbelievable place to try it from. And it starts at 38,600, finishes down here 36,600, and that's where we might find the reversal of a lifetime kick in. It takes you from here all the way up into 80, 90, 100, 120, maybe even finishing in the $200,000 zone. So that is that. Now, Ethereum was weak AF, wasn't it? We said this yesterday, getting death cross on dailies. The 4-hourly, we saw resistance on the 4-hourly death cross as well, which was not a good look for it. So we kind of assumed relatively safely that we were going to have a bad reaction for Ethereum, and we've definitely seen that now. So breaking down across the board, no bullish divergence on this move either. So no real reason to assume that Ethereum is going to perk up anytime soon. And with that, it will likely carry the dominance chart, and with that the total 2 as well. So it doesn't look good for altcoins at the moment. Altcoins still looking to continue with their direction, which is down, down, and down. Look, it's not the end of the world. This is a simple consolidation continuing to play out. We expected this from December. We started to see it from March, April. It's been going on since then. It's not a long time ago. If we go back in time, you can see that actually consolidations are all just part of the game, even in a bull market. The last major portion of a bull market was 2019. Big, massive run. Huge 6-month consolidation. And then we started to move up. Then March crash. And then sort of onwards and up to new all-time highs. So look, it's not bad really. If you zoom out, it's actually perfectly fine. It's normal. One day this will break out, and we will see new all-time highs. But for the moment, we're effectively consolidating still, and I know that it's boring, but trading it can, and to be honest with you, trading is pretty boring. To be honest with you, you've got to find ways to fill your time in times like this, and you don't have to trade every single day. Yeah, but geez, it is pretty boring, I have to say. So at the moment, let the formation hold. If we get the opportunity to try and take a position from the bottom of the formation, you can try that. I personally think it's better to allow for the formation to resolve in one direction or the other. At the moment, obviously being below moving averages of all significant time frames makes me feel like we will end up towards the bottom of the triangle, which is roughly around 57 at the moment. And then if we break down, then yeah, we've got all these areas that we've established down to the 40s, maybe into the 30s. And this will be over time, maybe over the next 2 weeks, next 4 weeks, maybe next 6 weeks. But towards the end of this year, it should resolve because the Holy Grail being that total 2 chart that I've got gives a time projection that the end of this year will be a bullish one. And if it's not, then maybe we are looking at a failed cycle. But I don't believe that. Until I see it, I don't believe it. So it looks very much like a carbon copy of the previous cycle when it comes to time and general direction. So I'm going to hold more weight on the idea that we will continue with that, which means most likely we will break bullish by the end of this year. But from what level, I hear you ask? Well, I ask that question too, which is why I look at these charts all the time, waiting to see which direction it wants to go in and which areas to take positions from. That's why I took chips off the table a couple of weeks ago, because I saw enough evidence to suggest lower on the chart, significantly lower, to keep some more capital available for long-term buys. And I say long-term, if we sink down to the 40s, maybe the 30s over the next month or so, and resolve from there, it should be more or less continuation straight up to new all-time highs across the board for a 12-month period, and I want to be around for that. That's my goal. For the moment, consolidation still in play. Significant pullback yesterday, and the concerning thing is that the S&P hasn't even begun any kind of downtrend. So if this does decide to break down and make new lows, then yeah, I think Bitcoin into the 40s and maybe the 30s is absolutely perfectly acceptable and should be expected. And because we are not seeing any pullback on the stocks at the moment, I think it's quite likely that we do see a Bitcoin below or in the 40s, maybe even 30s, before the year's over. And then from there, we actually go on a massive spending spree across the board, indiscriminately, for all the things that you want in your portfolio. But for now, 50-50 formation. We've not broken down. We've not broken out. It's boring. We'll wait and see. Allow for this part of the market to be, if anything, just a casual, approach to making a plan. You don't have to trade this environment. This, it's not, I wouldn't say incredibly tradable, but it's still doing what we thought it was going to do from December. So the overall analysis still applies perfectly, in fact, and it's just a matter of waiting for it to either break down, buy from lower, or break out, allowing for a way better trading environment, because if everything breaks out and we continue to go up and we've broken out, we've gone bullish, then the crypto market can be taken seriously. Individual altcoins can be looked at seriously, but right now I don't think there's a time and a place to try and make a plan for any altcoin based on its own chart, when the reality is that Bitcoin could find its way all the way down here, which, to be fair, would not be good for altcoins. 37 to 38% move from today's price action to the lowest area of major support. You would definitely imagine, and you should expect altcoins to come down at least to that, maybe even double that. All right. And I'm not saying it has to happen. You just got to be prepared for it. That's all. It doesn't mean that it won't happen. It might not. We might resolve to the up. But if you can't see that that's a possibility, then fine. But I see it as a possibility. Whether it's realistic or not is different, but I see it as a possibility. I'm not prepared to put my testicles on a train track in the hope that they will survive, like a horrendous collision. Isn't it? They will likely not survive. So I'll leave it with you there, with that analogy. But personally, today we were likely to see a bit of a dead cat bounce, maybe move back up over the next 24 hours to the $61,500 zone, and probably reject from there. And if we reject from there down to the upper 50s, $57,000 zone, which is where this trend line exists of a symmetrical triangle. Right, that is that. Hopefully the sound quality on this video is better than yesterday's, which was unbelievable. Tomorrow I'm still away, but I'll be back on Friday with a real computer and a proper microphone, and hopefully I'll have had some sleep as well. But that might be a bit too much to ask. Right, thank you for watching. Take it easy.